The Hedgeless Horseman here. This will be a video about letting your winners run. I think this is a very good topic. I remember watching a presentation or an interview with Ian Castle, which is a pretty famous microcap focused investor. Microcap as in ordinary companies, not mining sector. But I think he had very good points. He got asked the question like, position sizing, etc. And I think he made a very good point about the fact that he sometimes can have a very large position in a junior. Let's say 30% of his portfolio actually. I mean, I wouldn't recommend that with junior mining stocks, but just to prove a point, let's say, or discuss a concept, because his reasoning was there's a very good reason why a stock that might have turned out to started as a, let's say, 5% position turns into a 30% position if you haven't sold a share. That's because the story has just gotten better and better and better and better. And obviously, what can we say about exploration? It's like the more, for example, Great Bear drilled, the more they proved that this was a world-class system at Dixie. So as they drilled and they created value, the odds of them being acquired or that this deposit would actually be put into, become a mine, etc. in the future just kept increasing. So in one way, the margin of safety, assuming that price didn't get too way ahead of itself all the time. I mean, if the value curve was something like this would actually be, a poor buy. You would be overpaying here. But the value creation curve was up. The intrinsic value kept increasing. So maybe they had, back here they had 0 ounces, even inferred. But up here they might have, one could say, yeah, they probably have, I don't know, 2 million ounces or something. Maybe here they had like 5 million ounces, and when they were bought out, I mean, I think people are discussing it still. They don't have a resource, but maybe 6 to 10 million ounces. Obviously, 6 to 10 million ounces of high-grade gold underground in one of the best jurisdictions in the world is probably not worthless. And that's probably one of the first projects that will actually get built or bought out, regardless of what the gold environment is, because there's a tier 1 project is a tier 1 project in even if gold is 2000 and if gold is 1000, it will simply be the first one on the shopping block. So it's like, that unless the market goes under, someone is gonna probably buy this deposit or put it into production or whatever. So you can be pretty safe in knowing that this is not worthless. It will never be worthless because they've proved up too much. And again, it's like, who knows? Maybe they discovered a second zone here, whatever, that just hiked up the implied value, and maybe they found another zone here that hiked up the implied value. So the story was just getting better and better. Risks were actually decreasing, and for some time at least, the value creation curve was, maybe it actually was, I don't know, something like this, but then it, starts to peter out as the stock price and market cap increases, because it's obviously harder to grow your intrinsic value at the same rate if you have a $50 million market cap versus a $1 billion market cap, assuming that you're not finding something extraordinary along the way. And I would also just point out that, I think a lot of people, again, and I did it myself, looked at price way too much, like, instinctively think that if this stock opened up 100% here, you would be a latecomer. That, yeah, okay, this hole looks good, whatever, but I didn't buy it down here, so it's, I missed the opportunity. Where in reality, perhaps, I'm not saying this is the case, but with Great Bear, especially don't think it's the case with Great Bear, but let's say another stock that would have, stumble up on a discovery. maybe only morons would buy down here because the risk reward would be so poor, because there's maybe a 3% chance that they would actually find something of significance. And then they have the discovery holes, and maybe that chance of actually having something material and this becoming a multi-bagger goes up to 15%. So that's like, 5 times the chance of success it had down here, but the stock price just went up 100%. So that's actually a much better case buying the day after the discovery hole, because the chance of success went up a lot higher. So the implied value of the case went a lot higher than the share price went, even though it went up 100%. So maybe this was a no-brainer buy, while it was a bad buy down here. And that, of course, comes into having a longer term perspective. What does this discovery hole mean for the future? I mean, if you don't want to buy because they have had a discovery hole, it's around 100%. It's like, what does that discovery hole suggest about the next 10, 20 news releases? According to a study by Kennerland, for example, Kennerland Minerals, I mean, they made the point that the less drilling that's been done, and the better the results have been, the better the early stage story, basically, because obviously it's going to be a lot harder to drill. If you use 5 holes, for example, to drill into a target, and you have a 50 gram meter intercept, or even 100 gram meter intercept, that's a lot more impressive than if you drilled 100 holes, for example. Because if you just drill 5 holes and hit a 100 gram meter intercept, either you're incredibly lucky, given that a 100 gram meter intercept is top 1% of drill holes, or the system is just so robust that there's likely going to be a lot more 100 gram meter intercepts. And we've seen this with Newfound Gold. I mean, they had a killer hole, and since then they have had a lot of killer holes as recently as today. And this has been called overvalued all the way back here. And that they just kept on hitting, because that obviously looks to be a robust system they have at Keats, but at the same time they've found more and more zones. So it's like the story is just expanded. The growth potential keeps increasing because they hit new zones: Lotto, Golden Joint. I don't even remember all the zones, but obviously Keats as well, and they hit that Keats way up dip, down dip, etc. So there's gonna be a lot of infill drilling, I think. So the growth trajectory for Newfound Gold is very much up, and again, it's like, if the story gets better and the risks, let's say, decreases, and the upside potential actually perhaps increases as well, that's a reason to own more of something, not less of something. So like Ian Castle suggested, there might be a very good reason why a stock that started out as a 5% position becomes a 30% position, let's say, because the story just keeps on getting better and better. So naturally you would actually want more exposure. There is no if things didn't get better and better for Great Bear, you wouldn't have seen this short, obviously. And it's like, I mean, when it was here, it was almost set. Well, it didn't take long for it to be bought out. So this was market was off by 100% here. That's kind of interesting, honestly. But this was during a sentiment low, when the junior sector is absolutely manic depressing. Manic depressed and makes absolutely no sense. This was the COVID flash crash. Totally irrational valuations. But like, my best example of this is Skeena Mining. This is the one I am. That's been the most profitable position for me ever. And again, I don't remember exactly when I bought in. I think I bought in around here or something. No, I think lower. Let's say around here. And the stores just kept on getting better and better. You've probably seen the slides with all the targets just around TV and Jeff. So it's like, they started off with like, yeah, back here it was a concept basically. There might be more VMS systems. There should be more VMS systems. Then they brought in like Tom Weiss, the geophysicist, Thomas Moneke, Quinton Henney, John De Decker, and today we know of numerous outcropping uh, areas where VMS is outcropping. We have more geophysics target than I'm probably aware of. I've seen the TV Jeff slide. It has these dimples, let's say, of SkyTem anomalies, and that's up to 30. And you've seen the slide with 8 targets or so outside of, or in total perhaps, with around TV and Jeff, and that's just around TV and Jeff. So it's like they've been pumping out Blake sample results, SkyTem data, monster holes out of TV, high grade holes out of Jeff, and now we learned that the soil geochemistry that they just recently announced, that basically backs up the SkyTem data, that all those 8 targets are live because the geochem lines up with the SkyTem data. So it's like the blue sky of SK Mining has been going up for months, easily pretty much every news release since the last year at least. And the chance of success has gone up because they've drilled such good holes this early on at TV and Jeff, because these are VMS deposits, and I mean they're not the largest deposit, and you can miss them quite easily because, for example, SK Creek wasn't even a large deposit at all, but that was still worth multiple billions. So I mean, in my book, the story of SK Mining just keeps getting better and better and better. And the old me would have sold, taken profits way earlier. Maybe after a 50 or 100% return. Maybe I would have sold half my position, and then when it went higher, I would have sold even more than that. But now, even when it has corrected a bit because we're in the semi-boring period, and a private placement just was announced, it's still my main earner on paper, and I've actually added for the family, etc. I haven't sold a share yet. I actually bought some, not a huge amount because nothing is big compared to my position I already have. But the point is that this is a story that just keeps getting better and better, in my opinion. The blue sky just keeps increasing, and given the market cap right now, I don't think it will be too hard to fill those shoes, given that what Skeena has today is worth 1.6 billion or so on paper, and we have 8 targets just from TV Jeff alone, and we have John De Decker and the team, which have shown that their way of going about exploring here works very well because we had such a good success from TV and Jeff right off the bat. So this is a story that, again, I think just gets better and better and gets more and more de-risked. And I wouldn't say that, even though at face value it looks expensive, etc., but when you factor in how many targets, etc., they have, it's like, and the known success at TV and Jeff, I think there's a very high actually likelihood of this team unlocking something that's going to be worth a lot more than what SK Mining is worth today. So unless the story changes a lot for the worse, I don't see myself taking any meaningful profits, even though I have a very bloated position, because there's again just 8 targets to be tested just from the TVGF area alone, and then there's Vermilion, Scarlet Ridge, Tonka or whatever the new target up near Scarlet Ridge is, Vermilion, I don't know if I said that, Spearhead, Cumberland, Tet, etc. So I still see a growth trajectory and growth potential that's going to stretch for years, kind of like Great Bear. So I don't see, I see a story that's getting better and which deserves an increasing higher price, and I expect that simply to continue. So again, unless the price gets way ahead of itself or the story becomes a lot worse. This case has just become better and better. Eloro, another great example. One of the best examples, actually, I think. This is a store that's just delivered and delivered and delivered. Price is back to what it was a year ago, but it's way more de-risked. Blue Sky has increased, I don't know, fourfold, something like that. I mean, back here, I think this was on the back of like the Santa Barbara discovery holes. And now we know the Santa Barbara extension to the northwest. Now, especially now we hit at Porco, which looks like a monster target. The gravity anomaly, which suggests that this might grow way beyond what we even have drilled right now. So this is one where I think value creation went something like this, and then as they found the extension, etc., and start actually increased, and then we had the mag anomaly, which hiked up the implied value, etc., and now we hit that Porco, and now I actually think it's gone something like this, honestly. So I think this again. I love the Loro down here. I love it even more here because the implied value and value creation pace is keeping up. Because remember, the last two holes they released from the Porco target, they were pretty much the best holes yet. So if they drill more at Porco, I expect more of these results, which were better than, let's say, many of the results here. That means that they will create more value per drill hole going forward. And again, since they basically, there's reason to believe that it might get even bigger. I mean, they haven't even tested the eastern parts of the caldera, etc. So I think the blue sky potential is still actually unknown. I mean, that just keeps increasing as well. And now we have hit the Porco, so that de-risks it. The value creation pace increases. This is the best or second best exploration story I've yet to see, I think, given what we know now relative to price. Timberline, another example. When it went up back on the back of their twinned holes. One was a twinned hole. They used a diamond core drill rig to drill a hole next to an RC hole, which showed 36 meters or 1 gram per ton, and it looked like it should be better, so they put in a hole next to it with a diamond drilling core. That hole came out at 40 meters or 4 gram per ton, so it's like obviously a world-class hole pretty much, next to a hole that wasn't even that good at face value. So the RC drilling was understating the grade big time, multiples of what it actually was. So that was a game changer for Timberline. So the water well zone looks to be a lot better than previously thought. So I think they will keep drilling many good holes from the water well zone in the future, and given the grades and thicknesses they're seeing. So I think, when they drilled RC holes and the results were, okay on average, maybe the value creation curve was something like this, but now with diamond drilling, they know that, hey, we're getting way higher gram meter intercept, so maybe the value creation curve steepened a lot, and the implied value, blue sky, obviously got hiked up as well. So this was a game changer. So there's a reason why the stock is up. It's not, this is 18 cents, 36, so it's up 100% from the bottom. In my opinion, that doesn't mean it's like, yeah, you should, let's say, take half your money off the table if you bought here necessarily, because the story's gotten a lot better. And I think that, again, if the value creation curve was something like this, I actually think it's something like this. So the case got a lot better. It's you don't need a lot of this 40 meters of 4 gram material to have several 100,000 to millions of ounces, and that's could very well become a mine that could be worth, let's say, hundreds of millions of dollars, and timberline is obviously not valued at hundreds of millions of dollars. So the chance of success of them finding something, drilling up something material increased, implied value increased, value creation pace increased, because it's obviously a richer system than previously thought at, or a richer zone than previously thought at Waterwell. Labrador Gold, that's also been one of my hodl cases. I actually got in very early in a private placement, think around here something. Still waiting kind of for the, let's say, big break, let's say. But they're finding more and more gold. They haven't had really the Keat zone newfound gold stuff hits, but that could happen any day. I think their drill program is up to 100,000 meters. So any time now, especially with price going down, and if they snag or get into a real high grade burrito, as Quinton would like to say, that could change in a hurry. And even if it goes up to, I don't know, jumps 30-40%, that actually might be a even better buy than down here. I mean, I'm not selling right now. I'm keeping all my shares because I simply hate selling low. I mean, I think that's actually one of my strengths. It's like I despise selling low, because I know that just from sentiment alone, a lot of the stores are going to go up a few hundreds of percent without doing much. But if we have go into a sentiment high and they have some success, then I think we're going to start the next leg up. But obviously, when I bought it, it was a punt. They didn't have a single drill hole with gold. So obviously it's much less risky now, but it has gone down in price, but it's far off the highs, so it's like much better, I think, risk reward here than up here. But again, the case has changed a lot, so I'm comfortable having a larger position now than I had down here. Even though, again, many will see it like, well, I would want to get in here, etc. If I didn't get in here, I don't want to get in here. Even though that's not how you're supposed to think, because an opportunity is in the present moment. There was a case and an opportunity here. I thought it was a very high risk punt. Now it's a much lower risk, growth case. Cabral Gold, a good example. I don't really know why this has been punished so much. Crazy in my opinion. I mean, they've been pumping out great news. Found 1, 2, 3 oxide blankets, been hitting gold all over the place. I mean, I guess one explanation might be that they have so many targets, they're hitting gold all over the place, but it hasn't been, maybe it hasn't been, let's say a bonanza, or that, okay, yeah, you're getting hits all over the place, but will you be able to tie it together, let's say? I mean, I think the fact that they have hits over, in such a broad area, I think that signals that they could do a lot of infill drilling, and it will, they can grow ounces if they want, but I think they're actually trying to be very aggressive and test as many targets as possible. But I think they could switch to like just infilling and building resources if they choose to. And also I would say that I think the market is underappreciating the oxide blankets, because I think that's up to hundreds of thousands of ounces right now, which could be really, really cheap to mine, and could have an NPV of a few hundred millions, let's say. So in that case, Cabral is like stupid cheap, because the market doesn't appreciate how much value they've actually created over this period of time. And who knows, maybe there's some people are expecting a private placement or something, and that's also one good point, I think, about short-term focus, etc. Because I mean, since the market is short-term focused, I mean, if the market starts believing that this is it starts to believe that a private placement is going to come soon around this period of time. Okay, this is mostly has to do with sentiment, obviously, because every junior basically bottom around this period of time. But anyway, let's say that. So the market is, in a risk-off mode. It's focused on the short term. It kind of expects a private placement. So in that case, that's gonna basically be a wet blanket on the stock. But if the value creation curve is increasing, that means that the the short-term focus of something that hasn't happened yet, it just keeps the price more and more dislocated from the actual value creation curve. So, I mean, a lot of stocks, when they actually have, let's say, a private placement out, if that's what the market is, afraid of. I mean, I think there's an way too big of an emphasis on, dilution, because the real results and the results way overshadow if you're diluting by, I don't know, 6 or 10%, but that's another discussion. The market is the market, and I mean, the whole point of, or the main reason you can beat the market is because it's not rational. But I think there's quite a few juniors that are dislocated more and more because we've been in a sentiment low, and then they've done a lot of drilling, and still the market is like focused on maybe they're gonna raise soon, etc. So what typically I see happening is when the actual private placement is out and closed, etc., then it's free to ramp up, because then the short-term oriented market doesn't have a negative that it's constantly pricing in. And instead you have, these wild revaluations towards fair value. And I'm just assuming that's, possibly what happened for Great Bear in some of these, dips, etc. It gets overly punished because some short-term expectations of our financing or whatever, and then it just ramps higher, and then it gets punished, then ramps higher. So I think we're barely in the starting phase. I mean, SK, they're gonna close this private placement one of these days, and private placement has been the main talk. So when that's gone, that means that the next thing to look forward is drill start, assays, etc., etc. So there's going to be a lot of exciting catalysts coming that, as every day passes, is going to get closer, and the hot money, etc., are going to be more inclined to buy. So I expect this to, yeah, I mean, I'm pretty sure that I'm going to be sitting on a pretty good profit from here within 6 months. And I can't ask for more than that, really. Line 1. This is an interesting story. If you read the forums, there was a video out by the company, and basically, if I remember correctly, there was a hint that, they've hit visible gold, and I think even bornite, which is a very high grade copper mineral, at depths of around 1100 meters. I'm not sure if that's true vertical or if it's down hole, but anyway, that could be a game changer, let's say, because okay, if they hit something good that deep, that means there's probably a lot of good between that depth and up to where they've been drilling. So the implied value or blue sky potential can jump quite a bit immediately, because you can fit a lot of ounces, because I think that the vertical endowment, if I remember correctly, Quinton said it was around 2,000 to 2,500 ounces per vertical meter or so. So I don't have a calculator in front of me, but you can, if they expand blue sky by up to, I don't know, 300-400 meters, and you multiply that with the inferred vertical endowment, you can see how that could be a real, game changer from an implied value standpoint. So yeah, I mean, I think line 1 is really cheap, and that might just make it a lot better. And again, if let's say that the risk adjusted implied value that gets added if they have a good hit that deep might be worth, who knows, I'm just guessing here, like say 50 million, whatever, 60 million, maybe actually even more than that, given where gold is. But let's say price jumps 20 million. I mean, then it's obviously a better buy after it jumped 20 million than before, because the implied value went up a lot more than 20 million. And if it was just all else equal fair valued before, that means again that the case just got a lot better. And of course, if you had a position X here and it jumped to, let's say, 1.3x, and it should have gone up to 1.6x or whatever, that's one of those cases where it's warranted to have a larger position and exposure, because the case got even a lot better actually, and you would want more shares or more exposure at a higher price, because that higher price is not high enough given the new information. So that's why it makes sense to, again, letting your winners run in cases where the story actually gets better, instead of, like I tended to do, take my profits and run, let's say, because, okay, well, I'm sitting on a 50% return, I'm going to go into another stock where I can get a 50% return. And typically what I would do is like sell a stock that's up 50% when the likelihood of it returning an additional 50% got exponentially better, and instead selling that and go into some very risky stock. It's like Great Bear. It's like for example, if I bought some super high risk stock, it jumped on a discovery hole, I'll take my 100% in this case return and leave and go into another one of these stocks where the chance of success of having this discovery hole is like 3%, whereas in Great Bear's case the chance of success after the discovery hole of actually getting 100% more is like, who knows, 40% chance or something like that. So I mean, I would just be taking absurd amount of risks for a return that doesn't even I mean, I took way too huge of a risk for the return I got if I was just staying for 100%, and then taking that money, instead of buying more, I sold my position and reshuffled into an extremely high risk stock where the chance of success was 3%. So I mean, that's just one way to grind yourself down into oblivion, because that's basically like putting out bad bets, getting lucky on one, and when you should again be buying because this bet is gonna, if it paid off this much, there's a high likelihood it's gonna pay off a lot more, and instead you go out and invest in another store with a 3% chance of success. That's like playing the lottery, and if you win, you get a, if you buy lottery tickets for $100 and there's a 3% chance of success to win $100. I mean, obviously that makes no sense at all. That lottery ticket should be worth no more than $3 in that case. But that's what we typically do, because a lot of people tend to think that you have to be on board of the discovery hole, but this is actually typically the worst period to be invested if there's not a lot of smoke. I mean, Goliath Resources was a good example because they had outcropping mineralization all over the place, so they actually saw the zone come up to surface, and voila, they hit it in 24 out of 24 drill holes. So that's an incredible story, probably top 2 best drill speculations I've ever seen. It's very unique. I've talked about it a lot of times. I might do another video actually on it, or an article explaining why it's actually so unique. Yeah, I hope you got something out of this long rant. Again, I'm not saying you have you should necessarily go out and buy these stocks, but I hope you got something out of it, and I hope you maybe I hope it makes sense to you, and hopefully you'll use these, let's say, tricks or tips to get even better results yourself in your long-term investing career, because honestly, I enjoy sharing and trying to not necessarily only give people a fish to eat, but actually to learn how to fish. I think that's the most. Uh, I mean that's what I like actually to discuss. I mean pigs, etc. are good and all, but the greatest gift I think I could give people is to, uh, you know, teach others how to fish themselves, because I don't expect to be doing this forever, because honestly I think this market is actually a bit boring, because it is so brain dead that it's so simple to beat if you just have common sense and patience. And I never know. I might be doing something totally different in a few years, and hopefully you have taken away something from my investing strategies at least. Okay, consider me biased with all names. Assume I'm sponsored. Do your own due diligence. Make up your own minds. Always know why you're buying, because nobody's gonna be out there and hold your hands. And yeah, think for yourself. Thanks for listening.